Hello, welcome to another episode of Tutorials on the Go. My name is Edmond German, and today we are going to be discussing a whole new topic on accruals. Now, the accrual concept in accounting asserts that revenue and expense must be recorded in the period that is earned in terms of the revenue and incurred in terms of the expenditure, respectively, and not when the payment is received and made. This concept allows for certain entries to be made in the statement of profit or loss without the exchange of cash. Also, some payments may be made in a period without it being recorded in the statement of profit or loss in that period. We're going to learn about the treatment of such transactions in the financial statement. Let's now talk about accrual. Accrual is an expense or an amount owing for which has not been settled or received an invoice. So you incur an expenditure but has not been paid for it. Either you have not been billed or you've been billed but the payment has not yet been done. For example, suppose you receive electricity bills every 3 months, meaning the bill comes in at the end of every quarter. At the end of March, that is the bill for January, February, March will come at the end of March. That's for April, May, June will come at the end of June. July, August, September will come at the end of September. October, November, December will come at the end of December. If our accounting year end occurs at the end of July, then we will owe for the electricity used in July, because as per agreement, the bill is supposed to come in September, but we would have used the electricity for July. Also, if the invoice submitted at the end of March has not been paid, it also becomes accrual. The expense incurred or consumed in the period will, however, be recorded irrespective of payment having been made or invoice not received. Let's move on to look at some example to make this discussion clearer. Now, Rosalind started business on 1st April 2020, and during the year to 31st March 2021, she made the following payment in respect of what? Electricity. So a period starting from 1st April 2020 will end on 31st March 2021. First payment. On 18th July 2020, she made a payment of $500. That is for the 3 months to June 30th, 2020. So she paid for the bills relating to April, May, June, $500. 22nd October 2020, she paid $600 for 3 months ending September. 14th January 2021, she made a payment of $750 for the 3 months to 31st December 2020. As at 31st March 2021, Rosalind estimated that $950 was owing for the 3 months to 31st March 2021. She had, however, not received a bill from the electricity company. Right? So she has received and paid for the bills from April, the beginning of the year, till December. Now she's left with 3 months to pay. That is for January, February, March 2021. But she has not received an invoice. So once you have not received an invoice, you've not been requested to make the payment. So you receive an invoice before you make payment. So it means that this $950 will stand as incurred, but payment has not been made. So this will be an accrual. So we are required to write up the T account for the electricity and accrual for the year end 31st March 2021. We are supposed to show extract from the statement of profit or loss and statement of financial position. And we are also required to close off the account. Let's go and solve this question. So we open account for the electricity account, which is an expense account, and an accrual account, which is what? A balance sheet account, namely a liability. Why is it a liability? Remember the criteria for a liability. It must be an obligation arising from a past event of which settlement will require the outflow of economic benefit. The obligation is the payment of the $950 which hasn't been settled. The past event is what? The usage of the electricity for January, February, and March 2021. When you settle the liability, there will be an outflow of cash to the tune of $950. So it's clearly a liability. And this is supposed to be settled within 12 months. So it is a current liability. Now, every entry into the expense has to be debited. A liability has to be credited. So if you look at the first entry, the $500, we will debit the electricity account and credit the cash account. You're not expected to solve for the cash account, or that is why it is not present. We also come and debit the electricity account for $600 and credit the cash account. The third payment was $750, so we come and debit the electricity account for $750. Now the last quarter was $950, but this was not paid, so we cannot enter it as cash. Rather, we enter it as accrual, an amount outstanding. Then we go to the accrual account. We don't go to the cash account because it's not been paid, and credit it. The entries have now been made. Let's move on to balance the account. We come to the electricity account. We put total lines on both sides of the account. The credit side is 0, so the debit side must be the bigger. So we sum the debit side and we are getting $2,800. So we put the 2,800 in the total lines. Then find the balance, which is obviously the 2,800 to the credit. Then we move the balance to the debit side below the total line. Then electricity account stands balance. Let's go to the accrual account. It is 950 to the credit against 0 on the debit. So we bring total lines on both sides of the account. Put the 950 in it. Then we put the $950 at the debit side. We move the balance from the debit to the opposite side below the total line and put the $950 there. The account now stands balance. So let's move to close the account. We identify which elements this account fall in. Electricity account obviously is an expense account, and in turn is a statement of profit or loss account. The accrual account is a current liability account, thus a balance sheet account. So closing of this account, we'll have to come to the electricity account and credit it because the balance is debited with 2,800 in the name of statement of profit or loss account. We now come to the profit or loss account, open up an expense column, put the electricity account there and put the 2,800 there. If we're doing T account again, we would have debited the electricity account. Let's come to the statement of financial position. We create a current liability column, put the accrual there and put the 950, which is the balance, also there. Subsequent accounting period. In the examples that we have solved earlier, we were dealing with an accounting year. Now, at the end of the year, balances were left on the T account. As a result, the next accounting period will start with a balance brought forward, which is the opening balance, that is the closing balance in the previous year, and should therefore consider what entries are needed in the second period. Okay. We look at an example for subsequent period relating to accruals. So during the year to 31st March 2022, it means that this year is supposed to begin on 1st April 2021. Rosalind made the following payment in respect of electricity. 12th April 2021, made $950 for the 3 months to 31st March 2021. Hold on here. The year is supposed to end on 31st March 2022, which means it is supposed to begin 12 months back, which will get to 1st April 2021. But this payment is in relation to 3 months ending on 31st March 2021. What comes into mind? This payment does not relate to this year. So it means that this payment is for the accrual, which was left in the previous year. Next payment, 15 July 2021, $1,000 for 3 months ending 30th June, which is April, May, June. It fits into this year. 24th October 2021, $1,200 for the 3 months to 30th September 2021. July, August, September. This year we'll have it captured. 12th January 2022, $1,350 for the 3 months to 31st December 2021. Again, if it relates to this year. Now, as at 31st March 2022, Rosalind estimated that $1,500 was owing for the 3 months to 31st March, the last quarter of the period. She had, however, not received a bill from the electricity company. So now we are supposed to write up the T accounts for electricity and for accruals for the year to 31st March 2022. Also, show extract from the statement of profit or loss and statement of financial position. And lastly, close off the accounts. Let's get into solving the question. We open electricity account and accruals account. Again, let's move to the accruals account because it has a balance to be carried forward from last year. The balance was on the credit, if you remember. So we bring it forward to the credit side, $950. So we come to the entries. The first entry was a $950 made for the 3 months to the 1st March 2021. So that payment is in respect to the amount standing in accrual. So we come to the accruals account and credit it in the name of cash because money was going out for the $950 and go to the cash account, which is not showing here because we're not required to solve it, and credit it for the $950. Mind you, it will not be carried into the electricity account because it featured in the previous year's account. If we bring it here again, it will be double charging to the financial statement. Okay, now let's come to the electricity account. There were payments of $1,000 made. So we debit the electricity account as an expense account in the name of cash for $1,000. Another payment of $1,200 was made. So we debit it in the name of cash for $1,200. The third payment of $1,350 gets debited to the electricity account in the name of cash. The last payment of $1,500, which is supposed to be for the 3 months ending 31st March 2022, has not been paid because the bill has not been received. So it becomes an accrual. So we debit the electricity account, and instead of getting to credit the cash, we go to credit the accruals account in the name of electricity, balancing the account. Let's do that of the electricity first. We put total lines on both sides of the account as usual. The debit has a balance of 5,050 against a credit of 0. So we put the 5,050 in the total lines. Then we come to the credit side and look for the balance, 5,050. Then we move it to the opposite side, being the debit. We move to the accruals account. We have a debit of 950 and a credit of 2,450. So we draw total lines on both sides of the account. Put the 2,450 in the line. Come to the smaller side, which is a debit, and find the balance, which is $1,500. Then we move it to the credit side, being the opposite side, and drop it below the total line. We have to close off the account. So closing off the electricity account, we'll have to credit the electricity account with an amount of 5,050. Then we come to the statement of profit or loss, open up a section for expense and put electricity there with its figure. We come to the statement of financial position, create a column for current liabilities, put the accruals there, and put the amount of $1,500 there. So this accrual will also be moved into the next period to be captured when the payment is made. So guys, this is where I'm going to draw down the curtain on our discussion on accruals. I hope you have understood everything that we have discussed. If you have any question, any suggestion, any feedback, just visit our YouTube channel. We'll be very glad to interact with you and help you gain more understanding. Whilst you do that, we will entreat you to click on the subscribe button, hit on the notification bell, like and share. Stay blessed.